Okay, Deepak Jasani should be joining us any moment now. Maybe he's already with us. I'll urge my producers to join me again. Okay, I think we have him. Deepak, good having you. Thanks for taking the time to us. What have you been telling your clients to do in a scenario like this? Are you telling them to add on to investment ideas, or are you telling them to stay on the sidelines because the markets could correct a bit more from where we are right now?
Good morning. So basically, these are tricky times. There is no one answer for that. I think the emphasis more should be on a lot of trading and a little bit of investing in case you are underinvested in equities. If you are fully invested in equities, I think you will get better chances to add.
Okay, so if you have underinvested, pick up the investments, but otherwise don't. Now, I want to ask Deepak, what has been the large to and fro action in the telecom space? Because I think everybody's obsessed right now with what to do with the Bharti, what to do with the Reliance, what to do with the Vodafone. One, has there been, is there continuous buying of these on your bourses? And what has been your recommendation to your large clients? Are you telling them to add on after such a big rally, or are you telling them to stay put for a bit and maybe look at other spaces?
Yeah, so basically, essentially, telecom and pharma are the two performing spaces currently. Bharti came out with good numbers, very good numbers, in fact. And Reliance, of course, Reliance Jio is not the only company. Reliance has a lot of other businesses. And Vodafone Idea has their own set of problems. They seem to be slowly coming out, but I think we have to give them a little more time before we get excited about that stock. But yeah, Bharti Airtel, I think we are quite positive on the stock, and accumulation is recommended on the stock.
So you mentioned pharma and telecom being the two pillars right now. Have you written off financials for the time being? I wish I could have asked you about HDFC Bank because that's coming out as a consensus in terms of valuations, but leave that out. What about the top quality, top ranking financials? Do you reckon that it's a good time to add them, or do you believe that leave financials alone for the time being?
Yeah, so financials are perceived to have a lot of issues, basically on asset quality. Now, if asset quality fears don't play out over the next 3 or 6 months, then probably financials will recover and will recover quite sharply. But at this point of time, I think we have to give them a little more time before we get too excited about them. The PSU banks, of course, I think continue to underperform. The private sector banks, we have some stocks which are good, which continue to be good, and there are some others which are into troubles of asset quality and low credit growth and such like. So between the two, I think the better quality private sector banks, if you don't own them, then yeah, it's a good time to start accumulating them. But broad brush, one should wait before getting too excited on the financials.
Deepak, what has dropped out of conversation almost quite strangely is this whole fanfare around specialty chemicals, right? Before a month and a half ago, there was that one sector that everybody was talking about. Suddenly, it's just dropped out of conversation. What are your thoughts out here? And do you reckon that in these turbulent times as well, some of those companies would be able to hold fort and hold valuations?
Specialty chemicals as a sector continues to do well. These stocks are at multi-month or multi-year high or close to them, except a few of them. These stocks are still in the reckoning. So in that sense, people were excited. They took the share prices to a particular level, and from now they don't have enough visibility to push them up further. So in that sense, they would consolidate, they would go sideways, they would correct a bit, and then based on the management commentaries and the next quarter numbers, I think the next move could come. But broadly, that is a space which one should always keep on your radar.
Okay. Can I ask you about what have you guys made of this whole Vedanta delisting thing that has shaped up? Because a lot of retail clients, Deepak, are wondering what to do with Vedanta. If they have it, should they hold on to it? Can they expect a higher price? Because a lot of them don't know how would this reverse book building process work eventually. And yes, some of it might be an assumption, but I would love to know what your house assumption is on Vedanta and the delisting process.
So this delisting process is always very tricky for the minority shareholders. There have been cases where the process has dragged on for 3 or 4 years also because of the multiple litigation involved. Now, as far as this is concerned, I think the promoters have come up with an offer at the low end of the cycle. From their perspective, it may be the best time to go for it. From the shareholders' perspective, the stock price has fallen about 60-70% from their 2 or 3 year high. So in that sense, for them, offering delisting at these lower prices may not make a lot of sense. In the meanwhile, I think the stock price in the market may keep inching up in expectation of a higher delisting price. So the shareholders have 2 or 3 options. One is that they don't do anything; they just sit on the offer. They don't even offer in the whenever the offer opens. And if the delisting happens at a very high price, say 160, 180, 200 rupees, then they still have the option to offer them in the 6-month window post the delisting. So that is the first option they have. The second option is that they offer the shares in the offer at a high price, and in case the promoters don't accept them, the shares will come back, and in the meanwhile the stock price will tank again because there will not be this positive trigger with them, so they will lose out on the opportunity to sell even in the market. And the third option is they track the stock price very closely, and in case the stock price rises to say 130, 140, 150, and they are happy with that stock price, then they should sell out in the market. So these are broadly the 3 options that they have. The only downside is the promoters at some point of time are forbidden from the offer due to regulatory issues, due to some litigation, due to creditor issues. Then the whole edifice of the build-up of prices may fall. So in that case, the stock price may come back to the recent lows. So that is the only risk involved in this.
Okay, thanks for the detailed answer. The other one is, what does one do with some of the FMCG names, the likes of HUL and Asian Paints? Both of them have been in news. Asian Paints, there's this rumored block from the Reliance stable as well, which might come in. And HUL, once the block is done, maybe the large supply is out of the way. What are your thoughts? And couple that up after that, Deepak, with what has been that one top stock idea or stock recognition from your stable this time around.
Consumer stocks have not fallen in this whole carnage to the extent the other sectors have fallen. So in that sense, both the stocks which you mentioned are blue chip solid stocks with a multi-year growth opportunity. The only issue is about timing of your entry. These stocks can give you 10 to 12% compounded over the next few years. But ideally, you should sort of stagger your entry over the next 3 or 4 months in case you are excited about owning them.
Okay, what about the top recommendation though? I'm sorry if I missed that, but is there a pick of the week that you would like to share with us, Deepak Jasani? Or forget the pick of the week, something that you believe is a good investment idea from a 2-3 year perspective?
Frankly, a 2 or 3 year visibility is missing. There may be a lot of analysts coming on your show and giving you long-term ideas, but we frankly are not, we don't have that kind of a visibility because things are so dynamic and there's a lot of disruption happening all around. But from the near-term perspective, as I mentioned, pharma and telecom are the 2 spaces we like. Pharma we have today come out with a short-term buy on Glenmark. This is a technical buy, so there are no, fundamentally I may not be able to give you a lot of reasons why we like that. And the other is Cadila. So these are two, but they fundamentally also both of them are decent buys.
Okay, and I guess maybe that's a pertinent point too, because at times we don't quite have the visibility of a lot of businesses. But well, let's wait and watch if these businesses, some of these can sustain or not, because the banks right now are clearly sustaining in the near term. But Deepak Jasani, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
My pleasure.